The World Bank predicted that oil prices would average $90 per barrel in the fourth quarter of 2024, declining to an average of $81 as demand is relieved by slower growth. However, the bank issued a warning, stating that an intensification of the most recent Middle East crisis may cause prices to rocket far higher. According to the most recent Commodity Markets Outlook report from the World Bank, oil prices have increased by only roughly 6% since the Israel-Hamas conflict began. What is the World Bank's warning on oil price hike? The World Bank issued a warning that a significant escalation of the confrontation between Israel and Hamas, which might spread to a wider Middle East conflict, could cause oil prices to rise by up to 75%. After Hamas's horrific attack on Israel, economists and policymakers have been grappling with the possibility of a global oil shock as they have spent the last year attempting to control inflation. Since Hamas attacked Israel on October 7th, energy costs have stayed mostly under control. However, in an attempt to estimate the possible magnitude of economic consequences should the current conflict escalate and spread throughout the Middle East, economists and policymakers have been closely observing the course of the war and researching earlier conflicts in the area. According to a recent World Bank analysis, the economic effects of such a crisis might be exacerbated by overlapping with the disruptions to the energy system already brought on by Russia's conflict in Ukraine. According to Indermit Gill, the chief economist and senior vice president for development economics at the World Bank, the latest conflict in the Middle East comes on the heels of the biggest shock to commodity markets since the 1970s, Russia's war with Ukraine. The statement was included with the report. The global economy would experience a dual energy shock, not just from the war in Ukraine, but also from the Middle East, for the first time in decades if the conflict escalated. The World Bank predicts that this quarter's average price of oil will be $90 per barrel, up from the current average of roughly $85 per barrel. Although the organization had been predicting a reduction the next year, supply problems related to oil might significantly alter those projections. The worst-case scenario for the bank is based on the Arab oil embargo of 1973, which happened during the Arab-Israeli conflict. Up to 8 million barrels of oil might be taken off the market each day by such a disruption, driving up prices to $157 a barrel. A less dire, but nonetheless disruptive scenario would be for the conflict to unfold similarly to the Iraq War of 2003, with a daily 5 million barrel reduction in the supply of oil and a 35% increase in price to $121 a barrel. A more reasonable conclusion would be if the fighting was similar to the Libyan civil war of 2011, with 2 million barrels of oil lost daily from international markets, and prices rising by up to 13%, reaching $102 per barrel. World Bank representatives issued a warning, stating that the impact on inflation and the world economy would be contingent upon the length of the fight and the length of time that oil prices stayed high. However, they warned that food, industrial metals, and gold prices would rise if rising oil prices persisted. Following Russia's invasion of Ukraine, the US and Europe have been attempting to prevent a sharp increase in the price of oil globally. Russia's energy exports were subject to a price limitation imposed by Western countries in an effort to curtail Moscow's oil earnings while guaranteeing the flow of oil. In an effort to relieve pressure on oil prices, the Biden administration also used the country's strategic petroleum reserve. The New York Times was informed this week by a senior administration official that President Biden might approve fresh releases from the reserve, an emergency supply of crude oil kept in subterranean salt caverns close to the Gulf of Mexico. Officials within the Biden administration have publicly downplayed their worries about how the battle may affect the economy, claiming it is too early to forecast the consequences. At a Bloomberg News event a few days back, Treasury Secretary Janet L. Yellen stated that she had not yet noticed any indications that the conflict was having an impact on the world economy and that oil prices had remained mostly stable. "What might occur if the conflict intensifies?" stated Ms. Yellen. "Obviously, there might be more significant repercussions." How is Russia connected to the price hike? Between 2021 and 2023, Russia's exports to the United States, the United Kingdom, the European Union, and other Western nations decreased by 53 percentage points. However, these were mainly offset by an increase in exports to China, India, and Turkey, which climbed by 40 percentage points during the same time frame. The benchmark Russian crude, which is currently quoted in the mid-$70 per barrel range, is far above the $60 price cap for Russian crude set by the G7. The price cap on Russian crude oil introduced in late 2022 appears increasingly unenforceable given the recent spike in Ural's prices, the World Bank stated. The goal of the cap is to prevent purchasers of Russian oil from using services provided by the West, such as shipping and insurance, unless cargoes are sold for at least the capped amount. It seems that by putting together a shadow fleet, Russia has been able to trade outside of the cap. The official Urals benchmark recently breached the cap for more than 3 months, averaging $80 per barrel in August, the study added. According to the World Bank, developing country authorities will need to take action to control headline inflation if the Israel-Hamas conflict intensifies. It further stated that as trade restrictions frequently exacerbate price volatility and heighten food insecurity, governments should refrain from enacting laws that prohibit the export of goods, like food and fertilizer. What is the impact of the Israel-Hamas conflict on the world oil market? The scenario is different from the 1973 oil crisis, when Saudi Arabia launched an embargo against countries that had supported Israel during the Yom Kippur War, driving up prices. Analysts and industry insiders had anticipated a larger surge. Prior to this week's sharp decline due to macroeconomic concerns, oil prices reached a 10-month high in late September following the voluntary supply cuts announced by Russia and Saudi Arabia until the end of 2023. While David Goldwyn, a former special envoy for international energy issues at the U.S. State Department, stated that fundamentals will continue to be a major driver of prices, the International Energy Agency stated that the violence had not directly affected oil supplies. According to Rob Thummel, senior portfolio manager at Tortoise Capital, oil prices won't likely increase significantly unless Iran or any other nation causes disruptions in the Strait of Hormuz, which is the world's most vital oil route and supplies a fifth of the world's oil supply. This year, Iranian crude exports have increased dramatically despite U.S. sanctions, partially offsetting Riyadh and Moscow's voluntary decrease of 1.3 million barrels per day. Iran, a country that supports Hamas, has denied any role in the group's attack on Israel. When asked if the U.S. would impose additional sanctions on Iran in the event that evidence surfaced linking the nation to the assault, U.S. Treasury Secretary Janet Yellen stated that she did not currently have anything to disclose. President Biden will be eager to prevent tighter U.S. sanctions on Tehran in advance of a 2024 election since they would endanger petroleum supply and drive up energy prices both locally and internationally. Helima Croft, an analyst at RBC Capital Markets, however, said that it would probably be difficult for the Biden administration to maintain the permissive sanctions regime that has allowed Iran's oil production to revert to levels seen before 2018. But according to other analysts, the U.S. won't take a chance on supply interruptions. Given that policy objectives did not target Russian oil flows even at the height of the Russia-Ukraine conflict, we do not expect Iranian oil exports to be constrained either, according to Macquarie analysts. According to the experts, if Saudi Arabia did not agree to replace lost Iranian barrels, the United States was not inclined to strengthen sanctions. The United States is endeavoring to mediate a reconciliation between Saudi Arabia and Israel, wherein the kingdom would establish regular relations with Israel in exchange for a defense agreement with Washington. The Wall Street Journal said last week that Saudi Arabia informed the White House that it is prepared to increase oil output early in the following year in order to assist in sealing the agreement. Although Ben Cahill of the American Research Tank Center for Strategic and International Studies stated that the negotiations may now be halted, cutting off a crucial line of communication between the United States and Saudi Arabia, Washington has insisted that the initiatives should go forward. Does the increase in oil prices affect you in your day-to-day life? What do you think about the Middle East tensions driving up oil prices? Do share your thoughts in the comment section. For more interesting stories and updates, subscribe to our channel and do not forget to press the bell icon for notifications. Goodbye.